Hey everybody, today we're going to go over inventory financing, material financing, and contract or project financing. So we're going to cover a lot. And the reason we're combining all of these programs today is there are three programs that no bank knows about, and they can really help you grow your business a lot easier and a lot faster, right? So a lot of the challenges come from how do you finance materials for jobs? How do you finance your inventory? Besides just using a line of credit, right? So let's go into some inventory financing and how it works. All right. So the premise is you get approved for a certain amount that you can borrow. Okay. Let's just say you get a line for 200,000. That money can be used to purchase whatever inventory you need. Now, interestingly enough, they do not file a lien against the inventory, which is crazy, but that's why it works because you don't have to clear it as it's being sold. And you get rates based on how your credit is and how profitable you are. So I'll give you an example of an ideal client for inventory financing. Someone that's been in business for 2 years, that's profitable, and that's doing more than $2 million a year. They can qualify for inventory financing. And the way it will work is you just send in a basic application, you send in your financials, a tax return, and then you would connect your bank statement or your bank account to their online platform. And essentially, they're going to approve you for a line amount. It could be 100, 200, 500, a couple million. In fact, this company goes up to, I believe, 50 million in financing because they do a lot of international uh, inventory financing, which is very, very rare. Most companies will not touch anything coming into or from a different country. And they give you the line, and then you just draw down on it by purchasing inventory. And as you sell that inventory, you repay that line. It works like a line of credit, but only for inventory financing. Does that make sense, Madeline?
Yeah, a couple questions that I would have is how are the payments determined? Is it just based off of like percentage of deposits? Is it a monthly fee that's fixed? Is it variable? What does that look like?
That's a great question. So typically, it's going to depend on how long it takes to repay it. Okay, and it's based on a base score. So let's say you score out in the top tier. They might only charge you, let's say 3 to 4% a month on what's out. And as you're selling it, you can choose to pay it off. They actually are pretty flexible with the repayment terms. So you can pay it back all at once or in stages. And it's usually over 6 months or over 12 months.
And so this is largely unsecured since it's not collateralized against the inventory. Okay.
Correct. It's largely unsecured and it's for inventory only.
Any inventory compliance, like softwares
Yes.
or inventory counts? Okay. So what
It,
should a customer be prepared to,
physical,
furnish?
physical inventory only.
Okay.
Physical inventory only. And the only restriction that I've seen is no ammunition.
Oh, interesting.
Yes, there are, but I will say this: most people that do inventory financing, they won't touch ammo, alcohol, or guns. Okay, so as long as it's not one of those, it should work.
Okay.
All
Sounds
right.
good.
Yeah. Now let's talk about materials financing. Materials financing actually works the exact same way. It's just a different group of companies that would offer that. And when they're doing inventory for materials for construction, all they're looking for is that PO for those materials and the job it's attached to. So if we're looking to finance materials, you're going to need an application, 6 months of banks, AR, AP, the work contract, financials, and the PO for the materials for that job. So they basically what they want to do is they want to attach a job and the materials together, look at your financials, say, okay, we know that this works. We know you run a good company. We're going to finance these materials for you. And when the job pays, we're going to get paid. Does that make sense?
Yes.
Okay. And these are very, very unique programs because they only have one purpose. And what's really good is it's so specialized that they really nail that purpose when the client fits their box. All right. And so for materials financing, it's only going to be B2B and it's got to be based on a work contract. Okay. And then the last one, and certainly not the least one, least of all the options, is what I call project financing or mobilization financing. And that gives you a work contract. Okay. So you have a work contract. Let's say the work contract is $1 million and you need money to start the job. Why would you need money to start the job? Well, you might need materials. You might need to front load labor costs because you're going to have to bring on a full team. You might have to rent some equipment to get the job done if you don't own the equipment yourself. So what will happen is they will allow you to draw up to 20% of that contract. And then they will charge you roughly 5% a month until it's paid. So what I tell everybody that's a contractor or a GC is if you know you're bidding on a contract for $1 million and you know that you're going to need 200,000 to start it, increase your bid, okay, by let's say 25,000, because if you do that, it will cover all the fees and then some for project financing. So if you're always thinking of, all right, the contract's going to be $1 million, I want to borrow 20% of it. 20% is 200,000. 200,000 at 5% a month, it's going to be 10K a month. And if you know your first draw is scheduled to be paid in 60 days from start, well, you know it's going to cost you 20,000. If you increase your bid to 25,000, guess what? Now they're floating the financing for you and they don't even know it.
Yeah. I would also say an important topic on that side is, especially as you're getting into some of these bigger projects, oftentimes action equals money. And so oftentimes you're having to submit Davis-Bacon wages, prevailing wages. You're having to remit pay apps in order to get invoice draws. So make sure that you're being proactive about completing those documents, because if they're not in by the due date, then you're going to have that extra 10 grand a month in interest payments before you can take that next draw.
Absolutely. Here's what I would tell you on any of these programs. Most of the programs that we have work quickly. However, these do take a little bit. So if you know you have an inventory purchase in 2 weeks, get the process started today. Same thing, especially with project financing. Project financing will typically take, let's say, 3 days to 7 days for an approval. And then after the approval, it'll take about a week to get set up. So you really need every bit of that 2 weeks to get that done. Now, could you get it done faster? Absolutely. Here's what would determine if it was faster. Believe it or not, what day you sent it in and how quickly I can get you into a committee meeting. Because there's only one company that does that type of financing. And I know that they meet every day, every Tuesday and every Thursday. So if I get you into credit committee on a Tuesday or a Thursday, that's going to go a lot quicker. Whereas if you come in, let's say on a Friday, we're not going to have answers until probably Wednesday at best.
Right. Would you say that there are pros and cons, or what are they, doing these types of financing activities versus your traditional term loan or line of credit where there might be more flexibility on how funds can be used?
That's a great question. So project financing isn't driven on credit, where a line of credit or a term loan is. Okay, so project financing can work with a greater scope of clients because they're underwriting your contract and your client's ability to pay and your ability to get the work done, not necessarily credit. With materials financing and inventory financing, they absolutely are looking at your credit, and credit is going to be a major driver. Now, what would determine, or why would you use a line of credit versus materials financing or inventory financing? Well, material financing and inventory financing is just for that one purpose. I would still say you should have a line of credit established for you to take advantage of opportunities, emergencies, and short-term needs. But if you have inventory financing and a line of credit established, you really have two ways to finance all the jobs, and you have a lot more access to cash, which is what everybody wants and needs, right? So I would absolutely say do both.
Okay. For project financing, does there have to be a contract, or are you able to be like a spec home builder and finance the project and then get paid on the end?
I wish it would work like that, but if they're
They're
building here,
collateralizing the contract.
you know what's so funny, Madeline? This is how I know you know your shit. That's one that people always apply for, and it doesn't work. The only time that works is if the builder is actually working for a GC.
Got it. Okay.
Okay. So if someone's building spec homes, let's say it's the quote unquote developer, but they hire a GC to do the work,
Hmm.
that works. If the GC is just saying, hey, I'm going to buy land and I want to build all these properties on it and I'm going to sell them, that wouldn't work.
Okay. So find a GC and then that's your workaround.
Exactly. There you go. That's the $1 million question. Or should I say answer, right?
I was gonna say that's a good nugget for especially my client base.
That is absolutely fit for your base.
Yeah, love it. Cool. All right. That's good info.
What else do we have?
I think that's it. I mean, that was a ton of information packed into literally less than 12 minutes. And I'm going to snip this thing up, and because there's a lot of meat and potatoes for those custom home builders, for people who are running commercial projects, government projects,
Yep.
and trying to get into that, next echelon of $3 to $5 million projects.
And it actually works for manufacturing as well.
Mm-hmm.
So manufacturing and purchase orders. If you're a manufacturer and you have a very big order coming up and you need money for the raw materials, it would work the exact same way.
Okay. Love it.
Thank you, Madeline. Always great having you on. And guys, hope you got a lot out of this. We'll catch you next Wednesday, same time.
Appreciate it.